Well, we're heading into the summer, and obviously, a lot has been happening in the mortgage world. Rates have been ticking up. There's a lot going on, a lot of uncertainty around the country. So, we're going to break it all down with Bill in a cross country mortgage, find out what he's paying attention to, and get an update here as we head into June. Welcome into the Smart Mortgage Show. Ben George with Bill Linton, Regional President at Cross Country Mortgage. And Bill, it's June. So, first of all, happy summer. You got any big plans?
Headed out to California in August, so that should be fun.
Nice.
Aside from that, just hanging around the house, doing some projects and trying to find a little bit of time to slow down a bit and just relax a bit. That's the key.
Yeah, I'm sure you're going to need it after this first 5 months of the year. It's just been up and down. Obviously, rates have been kind of all over the place and moving around a little bit more than people expected, probably. Obviously, a lot of outside factors contributing to that. But, where do we currently stand on rates here as we, begin June?
Yeah. So to your point, it seems to us that, this year has started off a little bit busier. Our numbers are up a little bit overall, which we're really grateful for. I do feel like some of that had to do with the lower interest rates in the beginning of the year. So rates have crept up a bit. So interest rates as of this week, roughly 6.55%. 2 weeks ago, we were at roughly 6.75. So they've ticked back a bit. But again, we were close to 6% or even 5.99. We've locked plenty of people in the fives earlier in the year, and specifically before the conflict in the Middle East, that has put pressure on essentially more than anything inflation. And, oil is just connected to so many things, goods, services, products. So as the price of oil per barrel had jumped up to $100 a barrel, that was very inflationary. And what happens with inflation is it pushes up interest rates on 10-year treasuries. And then to keep mortgage rates or mortgage bonds attractive, they need to incrementally increase with the 10-year treasury. So that is what has pushed mortgage rates up from the 6% range to the 6.5% range.
So what are you talking about with people that come in to cross country mortgage that are looking for a mortgage? What's kind of the overall, I guess, feel from people you're talking to, and what's the common theme of the conversations right now?
Well, I think that the big question that people have is always, where are interest rates going, right? Everybody wants to know that. Nobody knows for sure. It's impossible to know for sure, but we do feel like there's some indications of where things are headed, and those revolve around what the current administration's goals are, as well as if you dig deeper into some of the inflation numbers and you pair out the issue with oil and you look at it a little bit more directly into some of the increments that build the total inflation number. So we feel like, barring any other, unpredictable geopolitical events that could completely derail this statement, we do feel like once this conflict is under control, that will ease the pressure on oil and also ease the pressure on inflation overall. We did have it under control. We've now popped back up over 3%. We do think wouldn't be too difficult to come back under that 2% range, which mortgage rates seem to like that. The administration is pushing for this. There's other tools they're using in their toolbox. The other big question is, will the Fed raise the federal funds rate to fight inflation? What we see typically is when oil prices increase the way that they have, it's not really helpful to the consumer if we raise rates, because rates have just gone up on a lot of the things that consumers depend on. Why are we going to, add insult to injury by raising interest rates? So even though the Fed's tone has been a little bit more hawkish on interest rates. Maybe they don't decrease them as many times this year. We absolutely think that forecast has changed, but we also don't know that they're going to raise them. And we hope that we can just keep them steady instead of seeing an increase in the federal funds rate.
It's interesting because I know earlier this year we were talking about, people not locking in rates because, hey, it's going to go down and things are going to continue moving, into a better position for a home buyer. As we're having that discussion now, it seems like it's probably reversed a little bit, and people are probably asking more and more about, hey, did I get this locked in? So just kind of a reminder for those that are maybe in the, in that process, no matter what point in the process they're in the home buying process, why it's important to lock in rates if you are getting close to finding that home that you want.
Superb point that we really need to drive home here is when we were locking people in at 6%, there's an excitement and an optimism that, well, maybe I can get to 5.5%. So let me hold off on the refinance, or I'm not settling for 2 months on the new purchase. Let me not lock in and play the market. That is not our strategy. Our strategy is always to take the bird in hand, lock in. If we lock you in and your settlement's not for 2 months, we can float down your interest rate if rates get better. And on a refinance, there's a cost of waiting where, hey, and we have several people that just didn't pull the trigger in time for one reason or another, and now they're waiting for rates to come back down. I have one customer that's kind of losing $500 a month because they didn't take advantage of it when they had the bird in hand. So to your point, locking rates is really important. And we have a strategy behind that really works well. And, we certainly employ that as much. Now, ultimately, locking in or not is the customer's decision. We're trying to lead them to the best decision possible. Locking in 99% of the time makes the most sense.
Yeah. So again, if you have questions, reach out to Bill, smartmortgageshow.com. You can text the word LEND to 21,000 as well to begin that conversation. But what else are you watching here in June? And then I guess throughout the summer, Bill, kind of what are you and your team paying close attention to?
So we are paying close attention to, the situation in the Middle East and how that's unfolding, what that's going to mean for interest rates going forward. I think that the big message that we're trying to send is we still feel like we're, for the most part, in this 6.5% or lower interest rate range, which is good. And there's more predictability outside of this issue with the Strait of Hormuz. There's been more predictability in the market. So if you're out there looking and you see a house you like and the payments make sense, and you lock into a rate and a payment, it probably will not be the permanent payment that you end up with. You're probably going to have a chance to refinance. And we've got all kinds of cool ways to make the cost of refinancing very inexpensive. So really, it's we've heard people say, marry the house, date the interest rate, right? So you're going to stay in the home, but you're not going to keep that interest rate forever because you're going to refinance. So we're always watching the trends, watching the opportunities, helping a lot of people to refinance right now who locked in previously at higher rates.
All right. Again, that conversation can be started by just texting the word LEND to 21,000 LEND and begin that process. We'll have another update next month, obviously, to kind of find out what Bill and the team in Cross Country Mortgage are paying closest attention to. But I know not the news we wanted heading into June, but I'm sure things maybe will settle down a little bit. Who knows, Bill? The biggest thing is, though, have a conversation with someone that has done this day in, day out, has years of experience, someone that you can lean on and have a trusted relationship with to get honest and transparent information, feedback, and really a look at what's best for you to get in that new home. But we appreciate you watching another episode of Smart Mortgage Show. Please subscribe too. Leave a comment, whatever's on your mind heading into June. We'd love to hear from you. And we'll talk to you again here pretty soon. Bill, have a good week.
Thanks so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.